Good day, fellow investors. Yesterday I watched live Powell's speech and Q&A later at the Chicago Economic Club, and there were many things said that are very important for the current situation and the investing outlook. The first thing that was not surprising anymore, but is something to keep in mind, is the market's reaction to the Fed's talk. Powell said, don't expect the Fed put for 10-20% market declines, and then immediately that is reflected in a 1-2% decline in the market in that half an hour. So the first conclusion is that too much of investing is based on the Fed and the potential Fed put. There will be a Fed put, but that is a consequences on other situations that you might not like. So let's discuss the key topics. As he's not here to save the market, we have to analyze the economics, the sustainability, all topics that he touched there. Then also discuss a little bit of politics, because I had an encounter with American politics and I'm agnostic. I don't care who is a politician or not, but there are certain factors long-term that impact the mindset and the path going forward, no matter left or right. Discussing tariffs, employment, the current situation, Powell clearly discussed how the tariffs will have a hit on inflation and therefore also possibly down on employment, which puts the Fed in a difficult position. The tariff offensive will be moving away from the central bank's goals probably for the balance of the year. So high uncertainty going forward in the Fed's opinion. And then when it comes to markets, he says that given the information, the markets are functioning normally, just reacting to what's the new situation and pricing that in. And then, as I said, the last Fed speech, and they are just emphasizing it now, was on April 4, just 12 days later, and then the market still reacts, let's say, vigorously to new comments, which is crazy. Later, they also had a Q&A, and then Powell also discussed what he discussed with CEOs the prior dinner, and he says that if the US, because of the tariffs and the new policies, becomes a higher risk investing jurisdiction, all that leads to consequences over the long term, expecting higher rates, lower stock prices, which is again something to consider. When it comes to the question on small banks, he says that small banks have more exposure relatively to commercial situations in the US, that bigger banks are more diversified, but that doesn't mean those don't have exposure. Again, something to watch when it comes to the risk and reward of things. Given we have had inflation in the last few years, yes, everything is 20% expensive. And now we have to see where do we go from that level. And the fact is that changes in policies lead to uncertainty, uncertainty leads to less spending, less investing, and that leads into, we will see what? Uncertainty for sure. But keep in mind that it is also a lot about expectations when it comes to investing. On those expectations, he also discusses how we had a good economy a few months ago, everything looked great, except what it might be the key message is that the US is on a fiscally unsustainable path. And he says how everyone is focused on the discretionary spending, however the money is in the non-discretionary spending, Medicaid, social care, Medicare, and things like that. If those things are not dealt with, then yes, the US is not at that unsustainable level, but at that unsustainable path. And he is saying it as the chair of the Fed, and therefore it is a risk that is there piling in the market, let's say, which means higher risk jurisdiction, which means higher interest rates, lower prices. That's what's going on. And perhaps also he says how tariffs, new policies might lead to issues in supply chains, which then leads to longer-term issues with inflation. Nothing is that straightforward. And now I was invited to this Newsmax I now see it was the American agenda, so they are a little bit, let's say, tilted to the right-wing politics, but okay. And I went there to the interview, and they ask questions, they have their own agenda, of course, but that's exactly what I want to discuss. I don't care who is in office, left, right. I'm just looking at the long-term trends and in general discussing politics and populism. I know as a politician, left, right, no matter what, you need to be a populist, and that populism gives you short-term benefits, but long-term possibly also costs. Let's listen to the interview.
Back with us, we have former Deputy National Security Advisor and the VP of National Security at the Heritage Foundation, Victoria Coates. Also joining us, researcher at stock market research platform, Sven Carlin. Welcome into both of you. Sven, we're seeing these back and forth tariffs. Trying not to call it a tariff war yet. China, though, they've been continuing to escalate, taking things above and beyond to the point where Donald Trump had to slap them with as many as 145% tariffs. Where do you think it goes from here?
Well, I'm from Europe, so I'm looking at this from, let's say, separated side. And any tariffs, any wars, any escalation is not good from both sides, because the inherent problem for both countries is the country's debt. And yes, tariffs might help a little bit, but if that leads into recession, into slowdowns, into loss of confidence, then there are really no winners for both sides.
Victoria, we want to get to this. Massachusetts Senator Elizabeth Warren believes that Congress has to take away the tariff authority from President Trump. Okay, let's listen to this.
Congress has a job right now, and that is to step up and take this authority away from Donald Trump. He has proven how he will use it, but remember, the statute that he's now using starts with a declaration of emergency. And in that same statute, Congress has the responsibility to decide, is it really an emergency or not?
Vic, it seems like they want to take away any authority that the president has to do anything when it comes to deporting people, tariffs, whatever it may be. It's just fight and resist.
No, absolutely. And Senator Warren, of course, had no problem whatsoever sending hundreds of billions of U.S. taxpayer dollars to Ukraine for an over 3-year period on the grounds that it was an emergency. And so that was like a slow motion train wreck of an emergency, just because they didn't want to actually have to pay for that money. They just wanted to rack up more debt. So, no, that's ridiculous. And I think, Xi's comments in Vietnam were very interesting. People are fond of saying there's no winner in a trade war, which is what he said, but there's going to be a biggest loser, and he knows it's going to be him. And that's why he's touring around Southeast Asia for the next week. That's his backyard. He should have those relationships sewn up, but he knows that the head of Vietnam has been talking to President Trump, that we have much more attractive terms to offer him. And so I think as we see these deals come together, which are going to be very pro-America, obviously, but also good for our partners and allies and bad for China, this is the new world order of trade that President Trump is trying to create.
So a famous investor who actually predicted the 2008 financial crisis is now warning that something potentially even worse than a recession may be on the horizon if President Trump does not mindfully navigate America's economic policies. I want to play that for you.
We are at a decision-making point and very close to a recession. And I'm worried about something worse than a recession if this isn't handled well. A recession is 2 negative quarters of GDP, and whether it goes slightly there, we always have those things. We have something that's much more profound. We have a breaking down of the monetary order.
Sven, what are your thoughts on this?
I think America is just focused on the wrong thing, and those are tariffs. Tariffs, trade, it is irrelevant. It's easy to point the finger at China. Who is the bigger loser? That's totally irrelevant. When Ray Dalio tells you that the debt situation is unsustainable, that you have to spend less, bring the deficit down from 7 to 3%. If not, there is no answer. There is simply nothing relevant. Tariffs, Ukraine, this or that is completely irrelevant if that situation is not dealt. U.S. interest payments went from $500 billion to above $1 trillion over the last 4 years. If that continues, that will be more than 14% of US budget, and that's unsustainable, no matter the tariffs, no matter whatever.
Victoria, I want your comments on Sven's. What do you think about that?
Well, I mean, I think it's a little rich for Europeans to be commenting on America's debt problem. And we have countries like Italy who insist that they can't get above 1.38% of GDP on defense spending because of their crushing debt. And they have a war raging in their backyard. But at the same time, I actually agree with Sven. I mean, and this is why we at the Heritage Foundation have been strongly arguing for fiscal sanity over the course of the particularly last 4, but really more than a decade now. And it is a very serious issue. Our close allies in Congress, all of them are Republicans, are committed to dealing with this issue. We are actually taking the steps to right our fiscal ship under Speaker Johnson and Leader Thune. And I would just be delighted to hear that we are going to see similar measures of sanity coming out of Brussels.
Well, I just, again, when it comes to the tariffs in manufacturing, thousands of American towns have lost all their industry, and they're looking for drastic change. I'll say that. Sven, Victoria, good to see you both.
Thank you.
Thank you.
And of course, the end was how thousands of Midwest towns lost all their manufacturing. And I come from a 2,000 people town, small village, and I don't know, 50 years ago, 1,000 people were employed in the textile industry, and the last 20 people were fired about 10 years ago. So the town lost completely the textile industry, and that is unfortunately how things are. Now, you can introduce protectionism to protect that, but that has a higher cost, and you are just postponing the inevitable. The true course is, of course, and where America was leading the world for the last 5 decades, is you go technology, innovation, competitive advantages, and things that are constantly at the forefront of the world. As soon as you start protecting, you lose that key edge. There is no search for better, and in the long term, it costs. That has happened many times in history. And now I want to ask you a question. How does the following picture impact you emotionally? Because when it comes to politics, you have emotions, emotions lead to votes, and then to policy decisions. Nobody thinks unemotionally, rationally, and that's why we also see that clash in the United States that might cost them dearly. Just for fun, I found this picture, so the art of war, the art of the deal. Now, let me know in the comments, how does this feel for you? Of course, both sides have benefits and negative things, and I'm not pro-China. I was born in a communist country. I know what communism is, so I'm certainly not that. But I'm also saying that you should be careful when it comes to protective policies and switching from what America always was since I was a kid, the leading, let's say, mindset in the world. Protectionism is far away from that. However, there is this new rising power, and we are now looking at the clash between two very opposite mindsets. How it will end up, there was this comment in the interview how China will be the bigger loser. So if someone is the bigger loser, are both parties losers, or there is the one that's a lesser loser is a winner? And those things really got me thinking. So will there be a winner in this war? We will see. Will there be losers? That's for certain, maybe on all sides. So we'll see how the world evolves. For now, we are at the start of uncertainty. For me, what was important when watching that was that even the chairman said that it is likely we will see increased volatility going forward. So prepare for that. The markets react 1-2% on a daily basis. So let's see how this goes forward. Thanks for watching, and I'll see you in the next video.